Stay ahead of the game with our weekly economic insights, where we break down the latest financial news clearly and easily. Hi, I am Soumya. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. The personal finance space in focus this week, and we'll start with the IRDAI's new surrender value rules and their impact on your pocket. We'll explore significant changes in insurance regulations, including mandatory policy loans, extended free look period, and faster claim settlements. We'll discuss the EPFO's reduction in penalties for defaulting employers and how it might affect your retirement saving. Then we'll also take a stop at potential tax changes for futures and option trading and the introduction of Ayushman Bharat Health Account for digital health record. We'll look into the proposed ATM fee hike, India's latest retail inflation figures, and the recent surge in gold prices. We'll also touch on to the preparation for the 18th Lok Sabha's first session and its potential impact on upcoming legislative activities. Finally, we'll look at how market indices have performed this week. Let's start with IRDAI's new insurance rules. The Insurance Regulatory and Development Authority of India has announced new rules to increase life insurance policies' surrender value starting September 30, 2024. Now, policyholders can get a surrender value after paying premium for just 1 year instead of 2 years. Let's check with our Experts Take section to see what our experts think about this. Sumit Ramani is joining us, Actuary and Co-founder of ProtectMeWell.com, who is sharing his viewpoint on IRDAI's latest circular.
A handful of changes, but from customer perspective, there are three important ones. The first one is surrender benefit. Policyholders can have surrender benefit right from the first year, which was from the second year earlier. The surrender benefit is also expected to be higher because of the rules around special surrender value, which is also, by the way, now transparent. So for surrendering policyholders, they are certainly going to get higher surrender benefit. But the question arises, at whose cost? Someone will have to bear that cost. Whether it's going to be shareholder or maturing policyholder, that's yet to be seen. The second important change is possibility of launching an annuity program, an annuity plan with a variable payout linked to an index. So to put things in context, annuity plans had fixed outgoes up until now, but now these plans would have variable outgoes, which means variable payouts, and customers would be able to link their expenses with inflation. The third is extension of free look withdrawal period from 15 days to 30 days, which means that if you buy a policy and you did not like it, you can withdraw in 30 days without any charges. So overall, the theme of the changes is customer-centric. There's some concrete steps, and I see more of them coming in future.
Moving on to the new insurance regulations, the Insurance Regulatory and Development Authority of India has announced two big changes to life insurance policies. First, all saving type life insurance product must now offer policy loans. This means policyholders can borrow money against their policies if they need quick cash. Second, the free look period has been extended from 15 to 30 days. During this time, customers can review their policy and cancel it if they are not satisfied. These changes give policyholders more flexibility and time to make decisions about their insurance. The mandatory loan option provides a financial safety net, while the longer free look period allows for better informed choices. This could lead to increased customer satisfaction and trust in insurance products. Now let's talk about more IRDAI's update. The Insurance Regulatory and Development Authority of India has announced new rules to speed up claim settlements and allow for more customized policies. Insurance companies must now process claims faster and cannot reject them just because some documents are missing. They only need to ask for documents directly related to the claim. Options like pay as you drive will be available for car insurance, linking premiums to actual car usage. Home insurance policy can now be tailored with add-ons for specific risks like floods or earthquakes. These changes aims to make insurance more flexible and customer-friendly. Policyholders can expect quicker claim settlements and policies that better fit their needs. potentially leading to cost saving and improved coverage. Let's move on to the ATM's fee hike proposal. ATM operators in India are asking for an increase in the interchange fee for cash withdrawals. They want the fee raised from Rs 17 to Rs 23 per transaction. This change would help ATM companies cover their cost and keep machines running. However, it could mean higher charges for bank customers who use ATMs often. People in big cities get 5 free transactions at their bank's ATM and 3 free at other banks each month. This fee hike might lead to extra cost for those who withdraw cash frequently if approved. The ATM industry say this increase is needed to keep the machines working well and encourage more investment in ATM nationwide. Moving on to the potential changes in tax rule. The government is considering changing how profits from future and option trading are taxed. Currently, these profits are taxed as business income. The new proposal might classify them as speculative income, similar to lottery winning or cryptocurrency gains. This could mean a higher tax rate, possibly up to 30% for F&O traders. Another idea is to introduce a tax-deducted at source on F&O transactions. These changes discourage excessive risk-taking by retail investors in derivative markets. If implemented, traders might face higher tax bills and reduced ability to offset F&O losses against other income. This could impact the trading strategies and overall returns for many retail investors involved in F&O trading. Now let's discuss a new digital health initiative. The Indian government has launched the Ayushman Bharat Health Account (ABHA) or Health ID, a 14-digit unique number to store all your medical records digitally. This digital health locker lets you easily store and share prescriptions, reports, and bills electronically. You can access your records anytime and share them with doctors or hospitals. The ABHA system aims to simplify healthcare management, ensuring important records are always available for diagnosis, treatment, and insurance claims. It is designed to be secure, with data shared only with your consent. This digital approach could save time and reduce paperwork for patients and healthcare providers. It may also lead to better coordinated care and potentially lower healthcare costs in the long run. Moving on to the changes in employer penalties. The Employees Provident Fund organization has lowered the penalties for employers who delayed depositing their employees' provident fund, pension, and insurance contribution. The new penalty rate is now 1% per month or 12% per year, down from the previous maximum of 25% per year for defaults lasting 6 months or more. This change aims to make it easier for employers to comply with EPFO regulation and reduce their financial burden if they fall behind on payments. The lower penalty rates might encourage more timely contribution from employers, potentially benefiting employees by ensuring their retirement and insurance funds are properly maintained. However, workers must stay informed about their EPFO accounts to ensure their employers are making timely contributions. And now let's look at recent inflation data. India's retail inflation, measured by the Consumer Price Index or CPI, fell to a 12-month low of 4.75% in May, down from 4.83% in April. This decrease is mainly due to the lower food prices compared with the higher prices last year. However, food inflation remains high at 8.69%. The Reserve Bank of India aims to keep the inflation around 4%. While the overall trend is positive, the RBI remains cautious about food prices, which can be affected by the weather conditions. Lower inflation could mean more stable prices for everyday items for consumers. However, high food costs are still a concern for household budgets. If inflation continues to ease, it might lead to more favorable interest rate in the future, potentially benefiting borrowers. Moving on to international financial news. Gold prices have increased, with MCX gold trading at Rs 72,715 per 10 grams, up by 0.18%. This rise is due to growing tensions in the Middle East and expectations that the US Federal Reserve might lower interest rates later this year. International gold prices also went up, reaching $2,362.6 per ounce. Rising gold prices can be seen as a sign of economic uncertainty for investors. Many people buy gold as a safe haven when they are worried about the economy or global events. This price increase could be good news if you own gold or gold-related investments. However, it's important to remember that gold prices can be volatile. For those considering gold jewelry, these higher prices might mean spending more. Let's discuss the upcoming Lok Sabha session. The 18th Lok Sabha, India's lower house of parliament, is set to have its first meeting on June 24th to July 3rd. A key task during this session will be electing a new speaker. Before this happens, a temporary or pro-team speaker will be appointed to swear in the new members of parliament. The senior-most Lok Sabha member, Kodikkunnil Suresh from the Congress party, is expected to be the pro-team speaker. He will administer the oath to other MPs on June 24th and 25th. The election for the permanent speaker is scheduled for June 26th. This process marks the beginning of the new parliament's functioning and sets the stage for upcoming legislative activities, shaping India's policy in the coming years. Let us wrap up with this week's market performance. The main Indian stock market indices, Sensex and Nifty 50, closed lower on Friday, June 21st. This drop was influenced by weak trends in global markets, especially after US dollar hit a multi-week high. The Nifty 50 did reach a new record high of 23,667.1 shortly after opening, but couldn't hold on to these gains. On Friday, foreign investors were net sellers, taking out rupees 7,298.8 crores from the market. However, domestic investors were net buyers, putting in rupees 39,811 crores. These movements shows that while foreign investors are cautious, domestic investors still have faith in the Indian market. For individual investors, this mixed sentiment suggests a need for careful consideration when making investment decisions in the current market environment. That's it for today. This week's Economic Insight taught us about the significant changes and plans across different sectors. Amidst all these changes, one thing remains the same: the financial world continues to evolve rapidly. So stay alert, stay informed, and most importantly, stay focused on managing your money wisely.